What's going on, everyone? All right, so we're back with another trade recap. So that means I did take a trade today. As always, I will do a trade recap. Win or loss, I will do one and explain my analysis and thoughts behind it. So this recap is for Tuesday, April the 8th. Now, as you are probably aware, if you've been trading, these markets have been something. They've been something. All right. These tariffs and all kinds of stuff. It's just crazy. But let me bring your attention to the weekly chart here. As you can see, our weekly chart, we're just going down. We're going down, 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 right? We have this volume imbalance up here, so I'm kind of eyeing that. What I want to bring your attention to as well is over here. Let me make sure you can see it this time. I was showing this fair value gap right here on the weekly chart, right? And I mentioned this low. And if we took that, where could we potentially go? Well, we have another one here, right? Weekly fair value gap. And then we have another one here. This is where I said a few days ago that I could see price coming all the way in through here, and then maybe even running towards this low here as a draw of liquidity. Now that's in the 15,000s. That low right there, 591.25. I don't know. We'll see. We'll see. All right, so I just wanted to bring that to your attention there. As you can see, this lower one, we made it right in there, that midway point. We still haven't closed. You know, this is a weekly chart, right? So it's going to take a little while. But, hey, we're bearish, bearish, bearish. That's the weekly, all right? So now let's drop down to the daily. Real quick recap. So, let me put this weekly one back real quick because I want to show something. I want to point this out. All right, so earlier, this was Monday right here. Okay, as we're coming down, this is the daily chart again, right? Look at this big volume bounce right there. Like, I don't expect price. Now, anything can happen with all this tariff stuff going on. But I don't expect price to keep going way too far before eventually coming back up into this volume imbalance. Volume imbalances are, which is the bodies, right? The gap between two bodies right here. You can see the body. You don't think about the wicks. It's two candles, and if there's a gap between the open and close, or whatever, however it falls, between the two candles, if there's a gap, that's a volume balance, right? So you can see here, you have the open here, and then the open here, right? So there's nothing, there's no body in between these two candles. That's a volume balance. Price typically doesn't, now this is a daily chart, but price typically doesn't go too far away in terms of time to those volume imbalances. Typically. Now, right now, anything can really happen, but this also would be a fair value gap right there. And here on the daily chart, right? As you can see today, we came up right to here. I don't think it hit it exactly because here's the high. Yesterday was 360.25. The high today was 357.25. So almost, right? So because we hit this higher time frame down here, fair value gap of the weekly chart, and then we had this up close candle. This was my bias for the day. This is what gave me a bias for the day initially. All right. So I'm looking at this like, okay, we closed up here. Well, if we closed up here and if we still yes, it can go lower, but always be looking where price could draw to. So if we closed up, then what I'm looking at is this is a higher time frame level. We could potentially retrace. since we hit this higher time frame level. You got to look at these things as, picture it as a wall, right? So like if you have a wall, like a regular wall, and you're running, right? Or like if you remember, this might show my age. There was a game back in the day where it was like it's a little video game, and you had these little bumpers, right? Like here and here, and you slid them up and down, right? And then there was a ball in between that would just go back and forth, and you'd try to hit it here and then back up, go back and hit here and bounce and go back and hit here. There's a game like that, all right? So the way it works, if you think of it like that game. Okay, so picture these levels as walls or bumpers, whatever you want to call them. If price is coming down to it, I hate how it squiggles, and hits it, you may bounce off of it, right? And price doesn't just stop for no reason. Think about it. Like price doesn't just bounce off something, or which I'm using this term what it really is drawing to liquidity or an imbalance. But it doesn't just hit it and bounce and just go back up and stop right here for no reason, right? If price stops here, there's either going to be liquidity in the form of a high, right? Internal range liquidity. Or if not, there's going to be some type of imbalance. Okay? Right here. Some type of imbalance right here. Like that's the way it works. And then if it did, and then it could, continue down, right? It's the way it works. Now, if there's nothing there, it could keep going. So I say that to say, as price is coming down here and it bumps off of this and it's going up, I'm looking what would make it stop? Well, if I'm just looking at the daily chart, well, that'd be here. And once it reaches that point, I monitor to see, does it stop there? Does it pull up and stop here and continue down? Or does it pull up and then keep going up to the next one? And then maybe going up to the next one, right? So until price comes up and hits this area, until this happens, I'm expecting price to go up and not stop and come back down. Now, once it hits this area, then I wait to see, does it come back down? That's that simple. Like I keep it simple terms. All right. So that's what today gave me. We closed here. Price. Why would it just stop? It created this. It could keep going, but let's see what it does. So I'm expecting an open, and it depends. We'll see when we drop down time frames. Well, let's just go ahead and drop down time frames. This was setting up my little expectation right there. Okay. So let's go ahead and drop down to the 1 hour. And here we were here. Okay. So this was 7 a.m. Okay. So I'm looking, if I'm expecting price on the daily chart could go up. Actually, let me go ahead and put this fair value gap back so we can see it. So if I'm expecting that it could go higher on the daily chart, what does the 1 hour look like? Is it bearish, bullish? What does it look like? Well, if you look back here, it's bullish, right? Because what do you have? You have this low, swing here, low, took this swing right there. Okay? This was Monday. When it took that swing, what do you have right here? A 1 hour fair value gap, right? So took that swing, drew back down into this area. Oh, there's another little 1 hour fair value gap. Like, what did I say? Price don't just go down or go to anywhere for no reason. Like, you can see it. It doesn't just do things on accident. Draws down here, goes up, boom, boom, boom. And then look at this wick all the way up here. Runs all the way up here, right? Immediately, what do you see right here? 1 hour fair value gap. Okay. Which, where did it go to? Right to the middle. You can't make this stuff up. Right to the middle. But then it continues up, right? So it's bullish. The 1 hour in this leg, this is a bullish leg here, right? So you're going up. So here's 9 a.m., 9 to 10 a.m. right here. So if I'm looking here, I'm immediately drawn to this smoothness down here. I'm immediately looking at this as a sell side liquidity. All right. All this area, sell side liquidity. And then immediately I see this volume imbalance right here. The gap between the two bodies. Okay. There's some nice sell side liquidity if price comes down. But I'm expecting a draw first. So we also have this 1 hour fair value gap and this one right here, right? So I'm like, all right, this is at 9 a.m. So if price keeps going up, well, I'm going to see what happens at the open. I'm going to see, all right, at the open, do we draw back down into this 1 hour fair value gap? If so, I'll wait for this draw on liquidity, look for market structure shift long right up here to this high, which would create, well, we have this high over here to the left. So this is what I was looking at for a buy side liquidity, right? So we have the buy side liquidity because this is the highest point right in the middle of that 1 hour fair value gap and right at the low of this daily fair value gap, which is also yesterday's high. Yesterday's low, right? So, wait, was that yesterday's low? I mean, yesterday's high, sorry. Yesterday's high. So I'm like, okay, so we could draw right up into there, sweep this area, and then head down to that sell side liquidity. So I got to wait. At the open, do we manipulate down first, take sell side, and then go up? Or not take sell side, go into this 1 hour fair value gap in here, and then go up? Or do we just continue drawing up and then go down and take this sell side? That's what I'm looking at right there, just that. Okay, so now let's drop down. See how I'm framing it out? This is what I do every single day. And I'm telling y'all, if you frame it out, I know not everybody that watches my channel is ICT traders. You might want to be. But anyways, if you frame it out and then drop down time frames, you set your expectations before you even start trading, before the market even opens. And now you're just waiting and anticipating. And that way, if nothing happens with how you framed it out and how you're anticipating, then you don't do anything, right? And if something does happen and you end up losing, well, guess what? You have money management to know, okay, I can't keep trading or whatever your plan is. I got to stop. It's a loss is within my plan. It's fine. And then later you take your screenshots, mark up your charts, and later that evening or whenever you go back and review. 9 times out of 10, you'll go back and review and say, ooh, I missed that right there. No wonder why that lost. I'm getting so much better at trading ICT concepts or just trading in general because of that, right? And because of the work, day in, day out, every evening. Like, yes, I sacrifice a little bit of sleep because I want to spend that extra 30 minutes or an hour doing chart review at night. Yes, I sacrifice a couple hours on the weekend because I want to do chart review and study, right? Like, you got to do this if you want to be successful. So my win rate for March was 75%. My win rate always averaged 60%. My current win rate is 75% for April. It's not an accident, right? Because I'm seeing things better because of all the work. And when you frame it out, if it's there, you take the trade. If it's not there, you don't take the trade. And if it's there and you lose, well, you analyze and see what's happened. And like I said, that's how I did it. 9 times out of 10, I missed something. And then you grow, you build on that. And then you start catching that something. And then you get better and better and better. That's what you do, right? All right, so let me stop ranting. And Drop down to 15-minute time frame. Let's see if we align. Okay, let's see if we align. Let's get rid of this market structure shift thing here. All right, let's see if we align with what I was seeing on the 1 hour. Okay, so here, yep, nice smoothness. This was that sell side I marked. Okay, let's go ahead and expand this way. Here's that sell side I marked. Why? Low, relatively equal low, relatively equal low. Nice sell side. Very good sell side. Okay. We took this high up here. So pre-market, you could say this was a buy side liquidity. Took that with some displacement, left a fair value gap. And then where's our open? Here's our open 930. So we did not. So we also had this 15-minute fair value gap right here at the open. So let me highlight that. Let me highlight that. So we opened, we came right down into this 15-minute fair value gap, which I was watching. Because if it's going to manipulate down first, I was looking for more. Yes, I could have taken a long off of this, which I almost did, and I'll show you why. But this could have been because if you're expecting the market to go up, you want it to go down first. So it did come down first, right into here, in that 15-minute fair value gap, and then it drew all the way up there, right? So I was looking primarily for it to draw down here based on the 1 hour. But whenever I dropped down to the 15-minute, that's why you got to drop time frames. I saw this 15-minute fair value gap, and I said, you know what? This might be all it needs, because up here was a bigger draw on liquidity to me. So I said, this might be all it needs, and then it'll go up there. And I missed the trade, and I couldn't chase it. So anyways, I'll get into that in a minute. But drew here, ran up, and you can see it got so close to that buy side liquidity. So buy side, there's not really much to change there because you still have that wick over there. Sell side looks good. And then I always highlight the internal between buy side and sell side, internal range liquidity or imbalances, right? So we have this imbalance, this one here, which I didn't highlight because we have the 1 hour gap. And we did have this one up here as well. 15-minute gap right there. Okay. So now this is where I drop. I have my expectation now, right? I want the market to open and drop lower, either into here and go up, or all the way down here and go up. Or if it just ran all the way sell side, that's where I would look for it to go up. Pretty simple. But ultimately, I wanted price to go up here. So now let's pull up my trading chart over here. Okay. 1 second. There we go. Here's my trading chart that I took my trade on. I have a lot more on it. Oh, it refreshed and took my... Dang it. Wait, no, it didn't. Oh, that's not the... Here we go. Okay, there we go. So here we have it. Right here, back here was the open. Let's find it. Okay, right here, 930 was the open. Right here. Make sure y'all can see that. Okay, we opened. We kind of did this, right? And then we reached down right here. There's that 15-minute fair value gap. Now look what we did. Get rid of this. Now look what we did. Here, hit that, came down, ran up. We had I don't really want to call this a market structure shift because it's technically, you could say we took these lows and had a shift here and then shifted back up when we took these swings and this swing. You could say that. But we're already in a buy model, right? Like we're already in a market structure going to the long side. I just like this pull down right here. So this could be the manipulation at the open and then up. But since we hit that 15-minute fair value gap, I was like, all right, I like this displacement up through these swings. And then we came right to this 1 minute fair value gap. And I liked this entry to go right up through these highs. That's what I liked. and I missed it. Not only because, I mean, I like to take my trade after 9:50, between 9:50 and 10 a.m., somewhere after that time, and I didn't get it. So then it shot up, it came back down, and I'm looking here at this order block, this potential order block. Why? Because it traded lower below these lows and immediately had a response and displacement up. So if you measure the entire body, look where price came down to, exactly the midpoint of it right here, mean threshold, and then ran off. So never came back lower anywhere. So it is what it is. But then over here, we ran up and we got so close. So here's a rule. If you're familiar with it or not, it's called the 3-step. Forgot what ICT calls it. It's like the 3-step something, 3-pattern step something. Where basically when you have a buy side liquidity or a draw on liquidity, when price doesn't just go there, right? It does this. Here, comes down, you have another high, comes down, and another high. That's your 3 pattern right there, your 3-step pattern. And that's essentially the same as running buy side liquidity. It got right there, and then you wait to see if you get displacement down or something, if you displace down from that point. So we made that high. We did run down here, traded through that 15-minute fair value gap right here. Then we came into here, and this is what I was looking at. I was looking at this bar up candle being a potential order block. Why? Because it's the last highest bar taking all of this high right here. And then we came down and closed underneath it. So if I measure the entire bar, look what happens. When you get over here, price hit the low of it, came down, but then look at the midpoint right here, this orange. Boom. Hit it. Boom. Look at the bodies. Couldn't close above it. So I'm like, okay, that's a good sign. And then I'm measuring this wick, which would be a rejection block. Why? Because you have the highest body here and the long wick. So I'm looking at the next wick stayed underneath the midpoint of it, the mean threshold. So what I'm looking at is this order block. We're staying at the mean threshold of that, can't close above it. And now we have a potential rejection block. So if I see displacement down through these lows here, then I'm looking to enter on any fair value gap that I see, because we're going to go all the way down. So what we did was come down. We did that, and we had this fair value gap. So I'm like, there we are. There's my entry. As soon as we came back, got here, price did a weird. So they started talking about tariffs, and price just went wham, went way up. And then when I saw it come back down here, I was like, yep, I'm going short, because it just ran up, came back down. I'm like, yep, we're going to go short here. And I had my target down here at this one, because I'm like, yeah, we're going to go. But then while I was in it, it started doing some weird spiking up and down. And I saw on my financial juice feed, it's saying tariffs, talking about tariffs and tariffs. I'm like, oh, anything can happen. So as soon as we got right down here to this midpoint, consequent encroachment of this 15-minute fair value gap, I said, I'm good. It's like 40 points, roughly. I'm out. Low-hanging fruit. They're talking tariffs. I'm out, even though I fully believed we're going to go all the way down, and I fully believed we're going to take that sell side liquidity all the way down here, which we did. So that's my trade there. Now let me pull up the video real quick for you so we can see, as always. And if you have any questions, leave them in the comments and I will answer them on the next video, the next recap. And for the record, I am not trading the rest of the week. This is it for me. We have tomorrow's the day before CPI. I always never trade the day before CPI. Then we have the day of CPI, which is fine, but we have a bunch of Fed speakers at 9 a.m., 10 a.m., so I won't be trading. And the same thing Friday, so I won't be trading the rest of the week. Taking the rest of the week off. All right, so here we go. You can see me mark. Well, first I was watching this one as a potential order block if price wanted to go up. But then here we are. I'm talking about the pattern there, the 3-step pattern. Let's keep going. Keep going. Now I measure out this order block, and I'm watching the midpoint. Okay, let's fast forward here. Fast forward, fast forward. And now I measure out this rejection block here. You can see. right here, wherever I measured it out. It's right there, and I'm watching it. Okay. Now I'm waiting to see if we displace. Then we come back up again. Oh, wait. This was initial rejection block potential. And then we traded above it. So I think we created a new one, if I remember right. So I moved it. Yep. So I got rid of that one. And now I'm like, okay, here's another potential. This one could be the rejection block. We just need displacement now. And if it displaces, then yep, we're going down, down, down. And then here we go. I'm watching it take the lows. I'm waiting for the fair value gap. I want to get to the point where it did the crazy spike. Okay, there's the fair value gap. Now watch. It's going to do like this spike up. And I'm like, whoa. And then I decide, let's go. We're going to go down. And because this was a fairly large stop here, I'm not going to put my stop all the way up there where I normally would, because this was a long ways. So what I did was I put my stop above the candle, the open of the candle that created this 1 minute fair value gap right here, which was right above the opening range gap, lower quarter from the 4th Friday, right there. All right, so you'll see here in a second. I want to let this play so you can see. It's coming. See, I'm getting ready to sell and watch. Boom, it shoots up and I'm like, okay, maybe I'm not. And I'm like, wait a second. Hold on. It's still there. Yep, I'm going to go ahead and go short. So I go short. Throw in my stop. Which actually, looks like I had my stop a little tighter than where I wanted it. Just now noticing that. Then I place I placed my target down here. And then you'll see right here, the candles get a little weird. I'm like, yeah, maybe I'll just target this low hanging fruit. And you see me move my target a couple times. Because I never get nervous in a trade. But today, when price started doing whatever weird thing it started doing, I got a little nervous. And I was like, you know what? Nah, let me just take I think it's the next candle it happens on. Yeah, let me back up. Forget which candle. It's either this one or the next one. It just started like doing choo choo choo, like zoom in, and I'm like, oh, what's it doing? I was like, what? And like I said, I saw my Financial Juice news feed that it was basically they were just talking about tariffs, and I'm like, yeah, anything can happen now. Let me just get out at the low hanging fruit. Because even like price would move and my values were not keeping up, and wherever price was going, like it was a lag because it was picking up on the volatility so much. It does it somewhere in here because I was failing to displace because I'm like, yeah, it should displace now. But it was failing to displace and it was doing this. And I just kept seeing the headlines for tariff. And I'm like, oh, no. Oh. So I'm like, yeah. See, and then look how close we got to my target right there. I'm like, oh, so I move it to break even. I'm like, at this point, I don't care. If it comes all the way back up, shoots up, and knocks me out right here, so be it. Because I just wanted to protect my trade at that point. Just leave it there. We got so close to playing around. I closed the trade. I just didn't like all those headlines of tariffs coming out. And I was like, yeah, let me out of this thing. So finally get out. $10,272 on that. And as you saw, it ultimately kept going down. But hey, that's the way it is sometimes. And I'm fine with that. So anyways, that's a wrap to my week. You won't see another trade review, trade recap from me this week because I won't be trading. So hopefully Monday, we'll see next week what it looks like. So that's it. I'm going to go ahead and hop off of here now. I hope you all have a great rest of your evening, great rest of your week. And if you are going to be trading the rest of this week, be very, very careful, and you'll probably want to size down. So, yep, that's it. So as always, trade well, everybody. Take care.